Good morning, everybody. All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video, or at least it's certainly the morning where I am, so afternoon or evening, wherever you are. Today, we're going to be diving into our daily cryptocurrency market update, and we've got some really interesting things to share with you in this video. We're going to be looking at some news from BlackRock, the Central African Republic. We're also going to be talking, reminding people that right now, there is an executive order that has been set in motion to actually come and regulate the cryptocurrency space. And I've often said that this is going to be, regulations, in my opinion, are going to be the next driver of adoption for the cryptocurrency market. Certainly within the US, we also have a similar thing within the UK, where they're essentially calling to not miss out on this technological revolution. And the fact that BlackRock, which is the largest asset manager in the world, and a number of other big institutions and corporations are actually moving towards the cryptocurrency market, and it's growing day by day by day in terms of its corporate infrastructure, is a very telling and positive sign, in my opinion, and a precursor to what this executive order may bring. And I do think there's going to be many cons with this order. Of course, I believe that they are going to implement more surveillance when it comes to the cryptocurrency market and ultimately decide who does and doesn't get to use it. We're already starting to see that with the likes of Celsius. But when we talk about mainstream adoption, I don't think particularly you're going to get that in terms of the DeFi space, in terms of it integrating with the traditional financial legacy systems without regulatory clarity. And that's why we've seen knockbacks on spot Bitcoin ETFs and a number of other things. So we're going to be talking about that in regards to the news. We didn't really cover the news yesterday. We spoke about our outlook on Bitcoin and where we're currently at, because there's a lot. It's a huge risk-off environment right now for a number of reasons that we've been covering on this channel for nearly 6 months. Everybody else is just starting to go, okay, in the crypto space, maybe we should look at the macro. Because the macro, actually, you can see there's a huge correlation between March 2020 and all of your stock market. So this is, of course, March 2020 down here where I'm highlighting my cursor, the S&P and NASDAQ. We can compare these against many other stock indexes, a number of other things, a basket, but these are some good staples to look at. And we've also been highlighting the correlation that's absolutely apparent. And we've actually been calling people out on Twitter, big accounts that just refuse to accept the macro backdrop. It doesn't matter to them because they can find a chart in 1940 and stick it next to where Bitcoin currently is and go, well, it played out well that time, not taking into account all the variables, all the criteria that we currently have at hand. And nobody is more bullish on the crypto space than I am, ladies and gentlemen. However, I do 100% understand that there are teething problems. Markets don't just go up, they go down. We've had a huge appreciation from March 2020, which crypto, of course, benefited from with all the printing. We're at the other end of that, and we've got a lot of global uncertainty, and we've seen people take risk off the table, and people have only took risk off the table. My real question is, okay, well, when do people start to actually panic? How low do we have to go before people start to panic? And there is the alternative version of that is we don't, Bitcoin doesn't have to go down, guys. Just the way that I'm looking at it personally, I think we're in a downtrend. I think potentially there is the continuation of this downtrend. Bitcoin will and crypto will absolutely reassert and go on to make new all-time highs. That is my opinion, not financial advice, but that is what I believe, and I'm positioned accordingly. Yes, we're sat in stable coins, but it's a small part of my portfolio that's in stable coins. The rest is holding these supposedly volatile crypto assets for the long-term time horizon. And I've made a lot of money within the crypto space. If you guys have been following me from the start of this channel, we were calling out, we've actually called out plenty of 100x's, plenty of 10x's. And everything in between. It's been a very fruitful time since March 2020, and we're at the potential other end of that. And markets, they move in cycles, this wave-like kind of motion. And I don't think, when we're talking about this wave-like motion, we've also dispelled the fact that we think there's going to be a 2-year prolonged bear market like we've previously seen following 2017 or 2013. I don't think that's the case anymore. I don't think the market is moved necessarily off its own fundamentals, i.e. the Bitcoin 4-year cycle theory. I think we're moved off institutional, or certainly we've seen recently, we've been moved off very much institutions and the macro backdrop, March 2020, Bitcoin wouldn't have got to where it did if it wasn't for that. That's my overall opinion. If you divide Bitcoin by the M1 supply, which actually took off very conveniently with high inflation, it paints that similar story. So we're going to get into it all, guys. We've already spoken about quite a bit. Lots of people calling for a rally in the stock market. This is typical bear market structure, guys, that you're now entering. You can see this looks, if you look at momentum, It's a topping momentum. We had earnings for many countries out, companies out there that didn't look too hot. And if we have continued deceleration of growth across companies, we have high inflation, that doesn't spell for a particularly great time in the equity market. And people just refuse. I've called out so many people at this point. Not one of them has a response of any. They'll go, oh, well, you're not looking at the bigger term time horizon. We zoom out, we show them that, and they go, oh, well, maybe, I don't know. Some of them don't even reply. I get that they're big channels, but, I have before, and we've been wrong, by the way, guys. No human being is going to deny otherwise. We're all human. We all make mistakes. We all get things wrong. But the point is that you're more accurate than you are wrong. You're more right than you are wrong. And these individuals just refuse to change their bias. And the reason being, it's like being a Bitcoin maxi, essentially. They've built a whole career off of it, and they can't deviate from that. Now, I'm not calling for Bitcoin to crash and burn. I'm just calling for caution right now. We're optimistically cautious on the cryptocurrency market. And for me, one thing that excites me and why we're sat in stablecoins, farming APYs on stablecoins, so we're hedging inflation via that method. Certainly if you take their stats, and we've even got higher stablecoin farms. We've got to bring you those guys. So apologies for not already. We've just been so busy. One reason I'm excited is because I know that an opportunity potentially is going to present. If it doesn't, I'm already the majority in crypto anyway. But if it does, those stablecoins are going to be getting absolutely deployed. We looked at Chainlink, we looked at ALGORAND, we've been talking about Cardano, we've been talking about a number of other layer ones and DeFi protocols that I think are going to do very well. So that's just an overall statement. It's always important for me to remind people of exactly what's going on. People get very disheartened. Don't be disheartened. This is still, in my opinion, going to be one of the biggest growth industries that there are. We're not going to see anything that I think can hold a candle to it in terms of growth and potential ROI. Still very early in this technology and where it's going. And some altcoins, you've still got 100x opportunities and more. So the cryptocurrency market isn't really doing a lot today. We can see the correlation is still absolutely there. And people will look at this and they go, oh, well, we haven't actually sold off as bad as we have. They'll kind of say, oh, crypto's actually holding up quite well against the stock market. I do partly agree with that because given everything that's gone on, guys, you've got to remember this. The crypto market should have absolutely crashed and burned if it was just a nothing industry that was going to go away. It hasn't. It's actually held up quite well and has been range trading for, over a year now. If you look at this big range, this sort of range area. But if you look, people go, it's not actually held up as well. I mean, that's a completely stupid argument. This, of course, is Bitcoin compared to the NASDAQ and the S&P. Bitcoin, since we started to go into a risk-off environment and things started to top out, is down currently today a whopping 42%. Nothing unusual, by the way, for the cryptocurrency market, which is a very volatile asset class. We'll just use the S&P as one example. It's only down 13%. Now, I actually think, and why I'm cautious is we've got this correlation with the equity market and we're moving into a very uncertain environment. We've called for potentially, and we our good friend, the market sniper, essentially has been calling for a potential top of equity markets and that we're actually now going into a downward period, given a number of factors. And there's lots going on in the FX market, which we're going to talk about in just 1 second before we get into the news. But this essentially is, potentially a head and shoulders that you're setting up that you're looking to actually break out of at this point with your left shoulder, your head, and your right shoulder falling into a spiller, a slammer all the way from Alabama. And that's what potentially we're maybe moving into. And what would that mean for the crypto? Well, I reckon crypto would follow, but I do think a decoupling does happen. And I had somebody try and debate me on risk off. They were saying, oh, well, it's risk off. So, your institutions are now going to put money into crypto. Doesn't work like that. When the people working for that institution, the hedge fund, whatever it may be, get tapped on the shoulder and go, you need to take risk off the table by 4%, they take it off of every risk off asset. They might maybe choose a few, but so far, given crypto's correlation with the traditional financial markets, it's done exactly that, and we've seen it. The dollar, we said, and we've been saying, and it wasn't our thesis, it was the market sniper's thesis again, that the dollar was going to take out its prior 2016 highs and prior 2020 highs. It's done that. It's looking incredibly strong. And the reason being is because your interest rate points don't just affect the US, they affect the world. The US dollar is the global reserve currency. And when you look at the dollar compared to a basket of other currencies, which what the DXY is doing, it's nearly 50% the euro. The euro is screwed. Absolutely screwed. I mean, how do you get out of that mess that is the European Union? I am essentially European. I'm British. It's nothing against the people of Europe at all, but more the central bank and how they are letting inflation run rampant, and we're already starting to see huge cracks show. And I think this is going to be a trend that continues, and the euro is going to go down, along with a number of other currencies. They are too dependent, too leveraged, and too much of a non-producer to do well in this environment, which is seeing commodities sky high, and inflation and interest rate points, certainly from the Fed, aren't going to do much to quash that. What they're going to do is take the heat out of markets, not necessarily food prices, commodity prices, and all these other things, given all the things that are going on right now. And it's not just inflation we've got to worry about. We've got geopolitical events. We've got everything. Back to why I'm cautious. We looked at where Bitcoin was now in return to these logarithmic regression bands. You can see where we currently are, guys. And what's happened previously. And yes, there is the argument, okay, well, we've been here before, but that's in an uptrend. We're potentially in a downtrend. Or is this just one big continuation pattern, which we have? And there is always the scenario. Nobody's going to be able to tell you with 100% certainty what's happening. What I'm here to do with you guys is essentially present the evidence, say, look, we're very bullish on crypto. Over the long term, things are going to be fine. Right now, it's not the time to be leverage long or, expecting some sort of a runaway bull market like you see all these guys on crypto Twitter and also YouTubers going, oh, this is a bear flag or a bull flag that's going to break to the upside. And because they're ignoring, they're only looking at one, they've got their blinkers on and looking at the crypto charts and going, and it winds me up. You cannot compare a chart from 2000 or even 19 anything with where we currently are today. We're living in unprecedented times in terms of monetary policy and potential huge shifts. I mean, look at the debt market. The debt market's going wild. We mentioned about the dollar. Let's get into some news now, guys. BlackRock, this is extremely significant. BlackRock lists blockchain ETF days after similar Fidelity launch. So even though we are cautious at the moment, there's a lot going on. And BlackRock is the largest asset manager in the world. If you thought the cryptocurrency market, or if they thought the cryptocurrency market was going to be a nothing burger and die and be squashed with everything, they wouldn't be looking to do this. They're doing this for a reason because they understand that this is what the future looks like and this is going to capture and make them a lot of money because people are going to use it and want it. Yeah, what we're calling for potentially for Bitcoin is maybe a little bit of further downside. I would like a capitulation event, actually, to be honest. Not only could I deploy my own stablecoins in, yes, my passive portfolio would suffer, but only for the short term. I would like a capitulation to reassert people into markets, rebuttal what the Federal Reserve are doing. And by the way, I'll tell you what's going to move the markets now. Watch out for the May interest rate hike. They're talking about 50, they're talking about 75 basis points, which, by the way, basis points is not a point. So it's a basis point is a fraction of a percent, basically. So you're talking 1 basis point would be 0.01%. 25 basis points is a quarter of a percent rise. They're talking about 0.5% rises and maybe a 0.75% rise. If they renege on that and come out with a 25% basis point rise, I think that's going to be very positive for markets and actually see them run. If they do a 50, yeah, we'll see. They'll kind of go, okay, well, the Fed's looking to get serious. If they do a 75, they're going to go, ooh, we better take a little bit more risk off the table. That's my thesis on that. But back to BlackRock, guys. World's largest asset manager highlights blockchain tech in new paper about megatrends. Megatrends. What is the cryptocurrency market? It is a trend upwards market that is still in its infancy, still is very in the grey area, and is being brought into the light by these guys so that they can manipulate it, monetize it, and of course control it. Yeah, people still have this notion that, people are just going to relinquish the talons that they have on the world with the current monetary system that they have. Yeah, there are some definitely freeing aspects of the likes of Bitcoin and of crypto, and I'm not a Bitcoin hater, by the way. I hold a lot of Bitcoin and have done for a while. But I just think that it's kind of too good to be true that Satoshi popped up in 2008, and when the real cracks were and the financial system was arguably set in motion to fail, and wrote this whole new money system. But I could be wrong on that. BlackRock has launched its blockchain ETF and labeled the segment a megatrend, just days after the competitor Fidelity brought markets a similar fund. The world's largest asset manager, which manages roughly $10 trillion, ladies and gentlemen, nearly 6 times our entire space in assets, just in one fund, by the way, added the iShares blockchain and tech ETF IBLC to its Megatrends product suite on Wednesday. BlackRock's thematic platform alone comprises 43 products with more than 50 billion in assets under management. So this is an ETF, exchange traded fund. So basically, they've got to back it up with the actual products that they've got in that basket. The expansion of our Megatrend lineup today reflects the power of millennial and rise of self-directed investors whose buying habits have reshaped mainstream consumer behavior and in turn the companies in which they invest. So that was from BlackRock themselves. Remember, we've got the executive order, which is huge. You know, this is going to really drive, in my opinion, and yes, there's going to be casualties of this war, the next sort of wave of adoption. Of course, we've got the Central African Republic, looks for quick wins, becomes second country to adopt Bitcoin. All this amazing news. Fidelity launching a Bitcoin or a crypto product for 401ks is huge news. The price did nothing on the back end of that and nothing on the back end of the news today. That is a downtrending market, ladies and gentlemen. Like we've seen before, you know, I've been here for 2018, 2019, 2020. I've been here since early 2017. It feels like a downtrending market in the sense that the previous ones I've been in, we've had amazing news, which is what really kept me in blockchain, and the price didn't move off the back end of it. That's interesting, guys, and certainly very telling. Also, there's a number of basket of reasons why we don't just look at a chart, look at another one and go, yep, they look similar. Let's stick that on Twitter and get 1,000 likes on it. We look at critically think about this market and try and position ourselves accordingly. And if you're just following somebody that's, oh, well, you know, long-term bullish, which I am, so I'm just going to find a bullish chart and make it look right, you're going to get it wrong more times than you get it right, in my opinion. So that's really all I have for you in this video, guys. A bit of a ranty one, but there's a lot that needs to be said. There's a lot, you know, we really want to educate people on this space, and I want you guys to do the best that you possibly can as investors, as people involved in the cryptocurrency market, and hopefully I can help you to do that. Maybe not. If not, it's always a good viewpoint. It's always good to have multiple viewpoints moving forward. So thanks a lot for watching, guys. If you enjoyed this content, like is always appreciated. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a fantastic Thursday, guys, and I'll catch you in the next one.